What's up? I'm going to go over today Helium Network Token, HNT. I think it's ranked in number right outside the top 100. I've been following this coin pretty closely for quite some time. Now this video will be solely focused on HNT. I'm not going to make any correlation to the rest of the crypto market or Bitcoin or overall sentiment in the space. This is just going to be a purely technical video on Helium, combining a lot of different factors, including advanced Elliot wave technique, classical technical analysis, volume analysis, things like that. Of course, we always start with a blank chart and Elliot waves to get a general idea of what we're looking at. Now, without having to do any thinking, we have a very clear impulse here, which was last cycle's entire run from June 2020 to November 2021, that bull run. At this point, given what has came after, you can quite clearly label this as a 1-2 structure, given the clear impulse and the downside that came after, which was an assumed 97-98% correction. That is 100% considered a bear market. Now the key here, at which point we don't know if the 2 is done here at the absolute low of $1.10, or if we're still working on a 2, and who knows, maybe this coin is dead forever. At this point, since the high has been put in, if the 2 was down there, that is a 500-day low. Currently, if the 2 is still not in, that is a 1,400-day low. If we take our trend-based fib time and measure the length of our wave 1 to our proposed 2 here, let's toggle off these and just have the 1-to-1 and the 2-to-1 on. Right here, though, if the 2 is finished here, it finishes nicely at a 1-to-1 ratio. If our 2 is not in, it actually seems like it would extend out here to close to the 3 fib time, which is not ideal for a wave 2. You would just assume the coin's dead at this point pretty much if it really continues out that long and trends downward. So, given that initial context, let's first take a look at the bearish count. What you would expect if you're a bear, if you're trying to be a bear looking at this count, and you don't think the low is in, and you're looking for lower prices to come. Now, clearly here off the bottom, you can count this entire 98% move down as some type of WXY-XZ impulse. And what matters more is the start of this new move, which again is clearly an impulse. So after a big move like that, after a 98% correction in a clear impulse, it can only be one of two things. It can either be a new wave 1 or a wave A. Those are the only formats in Elliot wave that allow a 5-wave impulse to be contained within them at the start of something new. Now in this case, we are assuming it is going to be a wave A, at which point we would look for a B. So here we just have a simple ABC or WXY to the downside, and we would have to label this as an very awkward expanding diagonal, but there's worse things that have happened. Elliot waves isn't perfect. You get your awkward expanding diagonal to finish your wave C here. So you have your A, B, C, and the C ending right below the high, from which point you would look for a 5-wave impulse to the downside to complete your wave C, ultimately coming below the origin of wave A at $1.1, because you would be expecting a partner leg to the larger wave A from the $50 highs, and which you would assume somewhere down in the 70-cent region to ultimately play out. Now, obviously, this count has issues compared to the bullish count. I'm not going to spend too much time explaining why, besides the fact going over primarily, I'll just go over the main thing. After a 98% drawdown, it's not really wise to be expecting more downside, especially after a very clear impulse out of the hole. So let's turn off that bear alternate, and let's turn on actually. So this is going to be a lot at once that shows up, but we'll go over it very slowly. Here's the bullish primary. Again, as you can see here at the beginning of this move, same impulse, but in this sense, it is labeled as a 1. And let's just dive into what has came after that. We have a nice 1, 2, 3, 4, 5 into an A, an ABC expanded flat structure into a B, and another finishing impulse into our C with a slight truncation on the 5th. In this sense, it would give us our W, 3-wave pattern into a W, ABC, from which we expanded in an impulse again to the upside, which in this case we labeled as our A WXY sideways downsloping structure in our B, again followed by an impulse in our C. So up to this point, we have a WXY, an ABC into a W, an ABC into an X, and our final leg looking for that Y. We have another impulse into an A, 1, 2, 3, 4, 5 structure, followed by an expanded flat into a B, ABC within the B, followed by a final impulse, 1, 2, 3, 4, 5, impulsive structure to the downside as a C wave to complete our wave Y. Ultimately as a WXY. Now if you notice, I'll pull up this pattern here so you can see it more clearly. This is something Helium has been doing in a fractal sense, repeating on the large time frames, repeating on the smaller time frames. Large impulse, correction, impulse to sweep the low. Large impulse, correction, impulse to sweep the low. Large impulse, correction, impulse to sweep the low. In that case, it is a WXY pattern, fully completed. If you're in the bullish scenario, you would assume that is the bottom of your wave 2 correction, because you needed a correction to match your giant impulse here at the beginning of our wave 1. Ultimately creating a $2.10 low as your ultimate invalidation. Now coming off the low, assuming that is the ultimate low you would be looking for in the bullish scenario. Before this move happened here, we needed to see an impulse form to confirm that the suspicion of this low here most likely is in. What did we get? We got a beautiful impulsive move to the upside. Now mind you, keep this in mind how this is all fractal. After this big downwards correction, what were we looking for? A large impulsive move to the upside. It came, confirming the end of that downwards correction. Now this is more of a sideways correction, clearly, as you can see here. This is not a 98% drawdown, more of the tune of 80%, still quite large. And assumptuous of a wave 2. So we got exactly what we were looking for, an impulse out of the low, giving us again high probabilities that what came before as a completed structure is most likely complete. But in order for that to fully happen, after this impulse was formed, we were fully expecting it to retrace to key areas of demand below us. Obviously, that would be all of this here as massive demand and support, which we did reach the 786 target, which is a key target for your wave 2 as well. I want you to notice something very closely here. What happened again? Now keep in mind the bigger fractal nature of what I just showed you. This large correction, impulse, correction, impulse. Mind you, this second leg of the impulse is very shallow and is just a liquidity sweep. Impulse, correction, impulse, impulse, correction, impulse, WXY. Fractaling down to the smaller time frames, WXY. Impulse, correction, impulse. A double zigzag ABC into W, X, ABC into Y. Now this is a very high probability setup. You expect at this point the low can or cannot be in. It looks nice as it is for the low to be in. We are expecting this area to hold as serious demand, specifically right around the $2.5 level. We can come lower once more, but ultimately we want $2.1 to hold as clear support, from which you would expect expansion to the upside in a wave 3. Also, something to note on this, down here we have a very clear technical bottoming structure, which is a inverse head and shoulders, assuming the low at 2.1 holds. Again, coming down to the 4-hour time frame. Very nice fractaling nature, inverse head and shoulders within the larger inverse head and shoulders within the final stretch of this 1-2 correction. Really what you like to see. If we toggle on all of our lines here on the chart, what are we looking for next? Right here on the chart, we just had a awesome liquidity sweep at $2.5. Ultimately, because we are expecting demand in this area, you can expect there be demand there. Now, something I noticed here as we were ranging very clear price suppression at the 2.7 region. If you notice, the first time we started suppressing here, we came right back down. Ultimately, I think it started here for real, suppressed for a day or two, straight back down, straight back up, suppressed for a day or two, straight back down, straight back up, maybe. What's ultimately happening here, as most would see as a sell wall and a negative sign, though yes, a sell wall, is actually a sign of positive suppression, positive price suppression, and institutional and whale accumulation. The price is intentionally being held down here by larger players, so they can have more time to position larger orders beneath it. Because say if you had a $50 million order and you wanted to buy right here at 2.6, to fill your entire order of $50 million, depending on the liquidity of the exchange and the market cap of the coin, you would send the price skyrocketing, mostly in a giant wick, just to have your order filled. Now that is not ideal. As someone with huge size in the market, you're going to want to space out your orders, which means you're going to want to have the time to accumulate at lower prices. Now, part of the reason why you see these giant expansion wicks here to the upside is because those are the institutional whales that are actually accumulating at these prices. Now, the probability is extremely high that in this region here we will see the same thing, but probably ultimately break that suppression level. I'll make a new video when this count gets updated. Now, for this whole thesis to be correct, we really need the $3.2 level to break. Now, what that would do, it would confirm all of this as the first major sign of truth and strength, because that would confirm this entire move down right here. It would change the market structure, which would mean the whales positioning themselves are now letting and helping the price rise to later offload their positions and distribute them. Ultimately, after 3.2, we would be looking for $4.4 to break. Subsequently, assuming both of those levels break, the larger picture as the 1-2 becomes extremely high probability, 80 to 90%, that this 1-2 structure is fully complete, and we can expect a new impulse to finish around $8 to $10 region, which would be the wave 1 of our large wave 3. It would look something like this, ultimately expanding very aggressively to take out all-time highs. Somewhere between $80 and $100 is totally normal in this scenario. This chart looks really good. It's set up really well. I want you to notice the fractal nature of what's going on. The key suppression here for just larger whales to accumulate more. I think with great probability, again, this region right here, I think will hold as serious demand. In the next video I make, we will have sprung out of here. Thank you for tuning in.